Today, we will be looking at the 10 most common ways that rich people actually get rich. While there are a lot of elements to financial freedom, it actually boils down to one core thing, and that's your mindset. Over time, experts have categorized financial mindsets in two ways: the rich mindset and the poor mindset. But what exactly is the difference? Throughout this video, we will be sharing 10 reasons why rich people think differently than the less fortunate. But before we get started, please remember to take a quick second and support our content by liking, subscribing, and turning the notification bell on. This helps us to create more videos like this for your entertainment. If you're all set, then let's get started. Number 1, they always set some of their money aside. Now, money may not be able to buy you happiness, but it sure can buy you some comfort. However, your comfort may not be long-lasting if you blow through all of your money without a sense of financial responsibility. This is why rich people, and others who think like the rich, always make sure to set aside some money. While not spending all of their income may seem daunting or even impossible to some people, putting some of your money aside can keep you from falling into a financial rut. You can weather even the hardest of days if you have a bit of spare cash in a savings account, or you can use that sum to make reliable investments. As more time passes by and you keep adding to your adult piggy bank, you will realize that the money you set aside has become your safety net, which is exactly why rich people are able to get rich. Once you start building that income on the side, you will begin to have the means to better your investments and make more money as you go. Number 2, they regularly invest in stocks and startups. Investing has a kind of financial allure that only a few other methods of passive income can match. When you do it right, investing can earn you money even while you are sleeping. Stock investing works on a buy and hold principle. This strategy is important because it protects you from taking certain damages from the stock market, but you need to be able to spot potential. How the rich use this method is by hiring a financial advisor to keep an eye on the stock market for them. These advisors help the rich in making the right amounts of investments to the right shares. Once they purchase and hold on to these shares, they get profits from both stock and cash dividends, which adds to their financial status more. Number 3, they are social climbers. If there is one definitive thing that can be said about how the rich can get rich, it is that they do it by being social climbers. Once a person has the rich mindset and knows that they want to be at the top, no social structure can stop them. Many millionaires go from working part-time at a company to owning it. The key here is to be persuasive and friendly at all times. By earning the love and trust of people who rank high above them, these social climbers are able to make it into their inner circles of the rich. From there, it is usually smooth sailing. With the support of a powerful business person, any aspiring entrepreneur or self-made millionaire could get there. Number 4, they become experts in their area. Almost everyone is familiar with the saying, "A jack of all trades is a master of none." Well, let us be the first to tell you that the rich feed off of this motto. If you were to ask for a couple words of advice from a rich person with a successful business, the first thing they would tell you to do would be to niche down. By starting to niche down, the rich are able to find what areas they thrive in. Then they become experts in their area, hyper-focusing on what they can do and sell. Once they reach a level of expertise, they begin to market their knowledge. Now just think for a second, what better way to get started on a new adventure than to turn to an expert, right? Well, that expertise sells very well once it has been converted into online masterclasses or one-on-one business coaching sessions. With substantial help and enough time to put in your business, you can use this same method to grow your income. Number 5, they start, grow, and sell businesses. Startups aren't just for investments these days. More often than not, people choose to start a business for the financial freedom that it offers. But this freedom takes time to attain. Depending on the growth strategy, it could take several years, if not decades, for a business to settle into a steady income. This may seem like a long, winding process, but the rich tend to approach this more systematically and strategically. Since acquiring assets is a big part of the rich mentality, business people usually have people who attend to their shares and properties. They start with a small budget and grow their businesses over time. By the time they're ready to sell, their profits usually double, triple, or quadruple, adding to their wealth by significant numbers. Number 6, they use debt as a tool. Now you might think that the main difference between the rich and the poor is that the poor are in debt, whereas the rich are debt-free. But that couldn't be more inaccurate though. Rich people are also in debt. In fact, they are tackling way bigger debts than the poor. However, there are two types of debt. There's the good kind and the bad kind. And a lot of factors go into determining this, but simply put, good debt helps you build your wealth, whereas bad debt, well, it's just that, bad and detrimental for your credit and overall finances. If you take big risks without having any means to pay your way out, you're probably getting into some bad debt. Big loans that exceed your total income and accumulated credit card debts are spot-on examples of bad debts. If you're borrowing money to support a certain lifestyle you can't actually afford, then you might want to reconsider your options and opt for the good kind of debt. So how does that work? Using debt for investments keeps you from using all your money in one place, and if your investment falls through, you end up losing less than you would have. By using this method, the rich are able to invest more, therefore getting more returns. Number 7, they try to take advantage of tax breaks. Tax breaks, otherwise known as tax returns, are a way of getting your money back from the government after your tax liabilities have been reduced. So how do rich people manage to take advantage of these tax breaks? Well, let's have a look. First off, you need to claim people whom you're offering financial support to, and this can be increased by putting orphans through school, adopting more kids, etc., which does make sense when you look at the amount of children that Angelina Jolie and Brad Pitt have adopted. Secondly, you will want to itemize your deductions to make sure that you're getting your money's worth. You can use medical deductions, charitable deductions, and mortgage payments to your advantage and opt out of a standard deduction. You can also contribute to your retirement for deductions and get up to $6,000 depending on your contribution limit. Remember that these are just a few examples of many tax break solutions. You can always seek out advice on how best to navigate through tax returns. Have you used any of these methods before? Let us know in the comments below. Number 8, they purchase equity shares. One of the most common ways of how the rich get richer is by investing in equity shares. But what exactly does this entail, and how is it important? Well, let us answer that for you. Equity shares are shares that you can purchase from any enterprise in exchange for your liability. Rich people generally use this method to add to their income, and most of them aren't even experts. So whether you are an expert or a complete beginner when it comes to equity investing, it's irrelevant. Both beginners and seasoned investors have made such considerable sums from equity investing over the years. Now, if this sounds interesting, just wait until you hear the benefits you could get from investing in equity shares. First things first, it's good for beating inflation. Unless you have been living under a rock, you probably have noticed the changes in inflation that have been happening since the start of the pandemic. Which means you've also noticed that having to deal with inflation can prove to be a real setback when you're trying to build on your wealth. Well, equity shares will fix that for you, because your return rate will be higher than the inflation rate. By investing in equity shares, you can protect your finances without that big of a hassle, which is what gets the rich extremely excited about equity shares. Own a substantial amount, and you're golden. Number 9, they develop and exploit marketable skills. This point also boils down to what we have said about the rich becoming experts in their areas of interest. However, it doesn't stop at that. You don't need to be an expert on anything to see success with this method. You just have to be able to tell what the market lacks and what the people need. If you have no problem wrapping your head around something most people struggle to understand, you might as well make money off of it. The hard part about this method is that you need to be on top of the market. And we don't mean reading the newspapers or checking your stocks app every now and then. You need to figure out the loopholes and gaps to be able to fill them. Knowing the ins and outs of a market will help you better spot these. So taking a few courses on the internet could come handy at this point. From there onwards, you could easily start developing the right skills. With a little bit of marketing spice, you'll have a booming business before you know it. Number 10, they renovate properties. Flipping properties may be the oldest trick in the book, but it's for good reason. Properties are one of the few things that never go out of demand or start to lose value. People will always need housing or places where they could establish businesses. This is a no-brainer. Yet the rich take this a step further. Instead of just buying whatever property they could to market it, they invest in places that require renovations. It cuts back on costs and creates a passion project for them to spend time on. With the added bonus of making a profit, this becomes the perfect hobby. They keep the properties until the value increases, maybe even put them on Airbnb in the meantime. That way, when they make a sale, they are able to double, triple, or even quadruple their income. As long as you have a good realtor, this is a solid method with little risk. But if you're new to the concept, you might want to do your research before stepping foot into the world of property flipping. And that marks the end of our video. If you enjoyed watching this, then be sure to let us know by giving us a thumbs up. Want to be the first to know when we have a new video? Then turn on the bell to be notified every time that we upload one. Finally, if you're looking for something to binge on, you can click on the video that's currently on your screen, and we'll see you in the next video.